Welcome to your Mortgage Insider Update. It is April the 14th, and it has been a wild ride in the month of April so far. Just in the last 10 to 12 days of the tariffs, we've seen interest rates as low as October of last year, so 6-month lows, and as high as earlier this year in February. So a little bit of reprieve today. Last week was not a pretty week on the interest rate front. Every day, more volatility, more news is really unraveled markets, trying to find a floor, a place to settle down. Both the stock market upheaval has really taken a big hit in the bond market. So we're going to take a look at the charts and see where we stand to start this week. All right, we start the morning off with the 10-year Treasury down 5 basis points as an improvement at 4.41% this morning. This was 4.1% this time last week. So we'll take a look at the charts and see what the last 7 days has brought us. So Friday, April the 4th, we got inflation numbers, we got jobs reports, and we also got the tariffs. The initial reaction was we saw this huge dip lower in the 10-year, only to be brought back on Monday last week. Pretty substantial move higher, hit the 200-day average, started the next day above the 200-day average, and literally every day, like a stair step, till Friday has moved up. So we have found maybe a point of resistance here. So it did spike Friday afternoon, only to settle before the market closed at 4.47, and then today starting off 5 basis points lower, being held steady here at the 100-day average. So I did mention the highs and lows of this last couple weeks has seen rates as low as, well, just briefly, but if we just want to start right here, October last year is the last point where we had the low point in rates over the last 10 days, and then the high point here takes us back to early February. We've played with this level already this year, being above it at the very first of the year and being able to stay below it. Hopefully this will create a ceiling or a point of limitation for rates to get any higher, as we do expect over time. Inflation reports just came out. Both PPI, Producer Price Index, and CPI, Consumer Price Index, came out last week, much weaker than expected, but we still saw the upward movement in rates. Just goes to show you how much the tariffs are really playing in the markets. Mortgage-backed security market higher of 31 basis points on the 6% coupon. We've waffled between the 5.5% and 6% coupon over the last week, just trying to find where the investors are purchasing. Right now, the 30-year 6% coupon is where we're going to follow. A little bit different look on the price to the mortgage-backed securities. So we were improving back until April the 4th. As the price increased, the interest rate of the consumer was coming down, as we saw in the 10-year. And then the deterioration, basically meaning the investors were not purchasing these mortgage-backed securities at all over the last few weeks, has brought us way down in price. That takes us back into that February time period I mentioned before. Not quite to the lows, but testing close to the lows that we had back in January when rates were at their highest point, around 7%. So in general, we're seeing interest rates right around 3.7%. This is coming off of a few days where it got to about 3.2%, 3.3% for that one Friday this month. And then since it's pushed back up past the 3.6% we had been hovering around, and really in the end, interest rates from just a few weeks ago only up slightly at 6.7 from 6.6%. So keeping that in mind, we'll just continue to move forward with our clients, show them properties as they are looking to make a move, and we'll ride this wave on the interest rates as the news comes out and as time goes on, hopefully a much smoother ride. Take care.